I'm Alan Kersner, Director of the Temple University Entrepreneurship Academy. And today is the second of our functional freelancing workshops and the third overall session this semester. And it's about a topic which is continually reemphasized to us by alumni as something they wish they learned more about while they were in college, and that is money management. So we have two more workshops coming up. A week from today, legal basics every freelancer and solopreneur should know. And then on March 15th, we're going to have a panel on really what you should be doing your first 90 days as you launch or relaunch your business. And then for those of you who have been present at other sessions, you know that we're doing our first ever Springboard to Launch Accelerator at the end of the workshops. It's open to all Temple University students, alumni, staff, and faculty. We're basically going to have 3 very hands-on interactive work sessions with one-on-one mentoring. And at the end of this accelerator, we're going to have sort of a, how shall we say, a public launch about introducing you to the Temple community and also the Philadelphia community. We're going to have a chance to talk about your business, network with people who might be interested, and we're also going to unveil a web-based Temple University freelancing showcase. And each of you who are apply and get accepted into the accelerator will be present at that and also have your website as part of our Temple University freelancing works website. So we will be getting in the next couple of days additional information on the application process and the accelerator. But you need to attend at least 3 of the 5 sessions. There was the Inspire session, last week marketing, finance today, legal next week, and then your first 90 days on the 15th. You'll complete a very short application. You'll have a brief interview with a very small screening committee. And then you need to commit to attending the 3 sessions and the culminating website launch and networking event. So we're really excited about this. It's the first time we ever tried it. If successful, we will continue to expand this in the future. And again, there will be more information forthcoming in the next couple of days via email. Okay. So with that, I would like to introduce Mr. Carl Kraus. And I'll let Carl talk about himself, but what I will say is he is a major friend and asset to entrepreneurs and small businesses in the Philadelphia community, at Temple, and a very good friend of IEI. In addition to being functionally extremely expert, and correct me if I'm wrong, Carl, but I believe his 2 sons and his daughter-in-law also have launched freelancing businesses in the music or music production industry. So with that, I will hand it over to Carl. And thank you, Carl, for coming and participating.
Certainly, Alan. Thanks for that introduction. Just to correct you, my one son has launched a freelance career in music and music production and composition, and that type of stuff. My daughter-in-law has launched a freelance business in graphic arts, and my other son is a financial engineer and mathematical and economist, and just, you don't want to know. But anyway, no, it's a pleasure to be here. I'll go ahead and share my screen, and hopefully that's sharing. Right. So, yeah, again, it's a pleasure to be here today. Looking forward to presenting some of this information on money management, but also answering questions, which I'm hopeful and fairly certain there will be quite a few of. So basically, when we're looking at self-employment or freelancing, this is the checklist here of things that you want to worry about. And when Alan took a look at this, he thought that the last item on this checklist might be something that most of you aren't thinking about, but I think it's important to think about, and we'll talk about that in a moment. But meanwhile, essentially the things that you have to do with managing money as a freelancer or as an independent consultant or as a self-employed person is to make sure that you do all of these things. And we're going to talk about things that you can do to address each of these, and hopefully relatively easy things for you to do. This doesn't have to be difficult. It doesn't have to be very complex, especially for solopreneurs, freelancers, relatively small businesses. So that's what we're going to be focusing on today, are these kind of topics. So the first thing I wanted to do before we get started is to do a quick breakout session, probably about 10 minutes. Just to get a feel and have you come back and report back, have somebody in your group report back on discussions around money and money management, because I just want to get a kind of a temperature for the room here, or for the Zoom, on where we're at, where people are at with concerns about, money management in general. What are your questions about it? Money management is kind of a broad and somewhat nebulous term, and everybody has a different definition of it, I think. And then what are some of the concerns, questions, worries that you have about managing your personal finances? And then the same thing about your business finances. And obviously, we don't want to get into anything that's confidential or personal here, but we're looking through kind of the general themes of what are the kind of things that you're interested in covering today, in talking about managing money, and managing money with respect to your freelance or solopreneur business. So I'm going to see if I can, from my control board here, do the breakout rooms. And yes, I can. And we have 38 participants. So I'm going to break you into 8 rooms. So it'll be 4 or 5 people in each room. So we can go ahead and I'll send you out. And like I said, we're going to probably spend about 10 minutes here. So discuss these 3 things. Basically, what questions do you have about money management in general? And then what concerns or worries or questions do you have about your personal finances and your business finances? And if you want, the intersection of those last 2, the personal and the business. So I'll send you out there now. Hopefully this works.
Lena and Cole, do you see your room assignments? MIA.
And I chose not to go into my room assignment. Is that okay?
Yeah, I assumed as much. Yes.
Yeah, we don't need your input.
Hey, Carl.
How you doing, Greg?
Molly, Joseph, you see your room assignments? This reminds me of class.
Yeah. I guess I should have set a timer.
Alan, question.
Yes, sir.
Where do we share? Somebody asked, is there a replay of the Inspire call? I don't know if it's safe to assume that's the first session.
Yeah.
But where should I reference?
Well, it should be on YouTube, our YouTube channel.
Okay, I thought so. Maybe I can get a link to it.
Leanne, Carl had a question about, do we mean budget, a project, or a living budget? Both good questions, right?
Yes, that's the answer. Yes. Well, that's what I was trying to get to with. I think she might have done it before I did the personal finances and the business finances.
Yeah.
But we'll talk a little bit about that. I mean, yeah, well, you saw that, I'm big on putting that iron wall between the personal and the business finances.
Yep.
Iron curtain, that's it. I was trying to think of the right term.
The Iron Curtain was torn down, wasn't it? Maybe not.
Yeah.
Maybe there's just a
Well,
different one.
The wall was torn down, but
Yeah.
I got a piece of that, by the way.
Do you? How'd you do that?
My parents visited Germany. My sister lives over there, and they visited a year or two after the wall came down, and they were selling pieces of it. It's just like a small piece, and it's got a little bit of spray paint stuff on it, but it's a chip out of the face of the wall, allegedly. I choose to believe it is. But
Yeah, I want to see the authenticity thing on that. Evan, are you able to see it on YouTube?
I see last week's on YouTube.
Okay, yeah, that's the one I wanted. Okay, good. I have a client that wants to set up or a student actually that's looking at setting up bespoke butchering.
Yeah.
Oh, you want to see the social, Carl?
Yeah. Oh, okay, yeah, not the freelance one. I want to remember I sent you a thing.
Yeah, that should be, they were waiting for me to re-record something, so that should be done in the next day or two, I believe.
Okay.
I'm not seeing that specific session on YouTube, but
All right. Well, let's bring up tomorrow at our 4 o'clock when Erin's there.
yeah.
Yeah, I did want to suggest or let you guys know, I don't know whether you're aware of it or not, but I was trying to find links to sessions to send out to students and to clients and that kind of thing. I can't find anything listed on the website. I mean, it may be there, but it's really difficult to find anything. And when you go onto the event, when you're on the IEI site and you hit events, it takes you to the Fox event site and there's only one thing listed. So something's all messed up on the website and the events and that kind of thing. But I forget which, I mean, it was either Be Your Own Boss Bowl or probably wasn't that. It was probably one of these events, either a social event or one of these. And I couldn't find links to it anyplace. I Google searched, I searched on the site, and nothing was coming up. So.
All right, we'll bring that up at our team meeting.
And what I've been doing is just copying the constant contact announcement and sending that out, but that's got my link in it, not a generalized link.
Right.
So.
Right. Okay.
Okay, we've got about 2 more minutes. Hopefully they're discussing actively.
Hello, Carl.
Yes.
Yes, hi, I'm Leanne from the Department of Film and Media Arts, and my gang in our little breakout room mostly had tax questions around, what's the benefit of forming LLCs or S corps or just being an independent freelancer and doing your 1099s or whatever. Is there a tax benefit, especially since most of us are in like an individual consultant? Would it still, I have no employees, I do this work. Christopher is interested in being a consultant. Caroline is interested in forming her own company, but she'd be a company of one person for a while. So
Right.
We're hoping you'll talk about tax implications of LLCs versus S corps versus just being a freelancer and doing, the regular tax forms at H&R Block or something.
Right. Okay. We can put that on the list, Evan, for questions at the end. Because I will get into that a little bit, but I'm not going to get into it in detail, I don't think. Because it's a 20-hour conversation.
Okay. I get it.
We do have the lawyer next week, but she will most likely be very focused on liability considerations as opposed to tax.
Yeah.
Yeah.
So I won't bother touching on that today.
Okay, good news.
Yeah.
Divide and conquer.
They're
The
related.
tax issues, we can talk, well, they're related to some extent, yeah.
Yeah.
So we should have everybody back now. Okay, so hopefully you had a good discussion. Let me get my screen back up here. And these are the questions that we had. So I think you're in groups 1 through 8, so we might as well start at the beginning, or just, call out maybe. Anybody want to share a little bit about what their group discussed with respect to these 3 issues?
I'll jump in. I'm in group number 7 with Alicia, and some of the things that we're concerned with were what applications would be best to use for managing the money. How do you do forecasting, and who really gets paid what? And whether, first, second, or third, if we're always on the top of the food chain, or if vendors come before ourselves.
Okay. How about somebody else?
I wanted to know what is everything that could be considered a business expense, like for taxes, because there's always things that I know I leave out. I just wouldn't even think of.
Okay, we'll touch on that a little bit.
Yeah, I
Other
brought up
issues that came
the
up?
question in our group about forming LLCs or S corps to protect yourself as an individual business entity. Is that the best way to go for, particularly for single, people, companies, just one person, or as a freelancer, like a film camera operator, or a grip or a gaffer, or editor or something, because my students are all filmmakers.
Right. Okay, good. We'll try and touch on that. I don't think I have much on taxes during the presentation here, but certainly we have plenty of time at the end. We can hit that up as part of the Q&A session. Any other thing that came up that was interesting?
I can go.
Okay.
Yeah, so thinking about managing your workload where you can expand and make more money for yourself, but also not get in over your head. You know, you don't want to basically grow to such a degree you have to work that much harder to make, say, payroll one day, or you know, just how do you grow as a solo entrepreneur, but you're only one person, you know?
Yes, Mom. I can.
Okay, yeah, we'll touch on that as well. I'm tempted to make a comment about there being money in the banana stand, but I'm not going to do that.
Are you saying that because what was in my background?
Yeah.
That's my 4-year-old. Yeah, sorry. Oh, the age of COVID.
Anybody else have anything?
I can jump in. So our group had a discussion about, like, with COVID and everything, how to just better manage, especially with having much more variable income, not knowing, expecting how much you're going to make, and how to just better manage that.
Okay, good. We'll touch on that as well. Not specifically to COVID, but we can always twist it to COVID. So yeah.
I have
what
a
you'll
question.
find, yeah,
Excuse
what
me,
you'll
yeah,
find is as a freelance, you're going to see that you will have variable income. And yeah, it's been just more dramatic with COVID, I think, than it would be otherwise. Okay, so let's move on. That's all good. That's good. So what are the money challenges for freelancers? And it basically, we get right to it, just what you were talking about, uneven and uncertain income. I mean, month-to-month income, which is basically the payments that you're receiving on a month-to-month basis, it can vary widely. You know, especially if you're doing large projects or longer-term projects that take a month or so to complete. Those projects may bridge more time, more than a month, and therefore you may have months where you don't have any income, you don't receive any payments, and other months where you receive very large payments. Also, you see things where commissions for work or performances, that type of thing, can be seasonal, and you can be very erratic in timing. You see this a lot with a lot of the performances for like community theater and for musical performances and things like that. They become very seasonal. And so you have variations in the income. You can also have unexpected business expenses, and these can be things like the hiring of vendors or subcontractors or other trades to help you on a project. They may make a quote and you'll see cost overruns because the scope of the project changes, something like that. There's unexpected delays, which end up making more higher expenses. All sorts of things can contribute to unexpected expenses after you've quoted a price for a project. You can have variable profit margins. Profit margins are the difference between what you charge for something, what you get paid for it, and how much it costs you to produce that service or that product. So that can vary from project to project depending on who your customer is, what the type of project is, how complex it is, things like that. Sometimes you're going to make a very high profit margin. Sometimes it may be very thin. You see the extreme of this when you do something at a discounted rate for, say, a nonprofit where you're trying to help them out. So you might have a very low profit margin or maybe even no profit margin on something that you do for a nonprofit compared to something you might do for a private entity or a public entity for that matter. You can have unexpected interruptions. the difficulty with being a solopreneur, a single person working, whether you're a freelancer, a independent contractor, consultant, whatever it is that if you have interruptions in your work for any reason, personal, family, or personal issues with illnesses, family stuff, take a vacation. During that time, you aren't working, therefore you're not producing, therefore there's no money coming in. So that all of those kinds of issues can cause variable income and basically unplanned shortages in money coming in. And taxes. One of the challenges with being an entrepreneur in general, running a small business, and in your case, very small businesses as freelancers, is that you've still got to pay taxes. And if you spend every bit that comes in during the year, you get to tax time and you get a very big surprise typically. So it's important that as you're dealing with money, as you're thinking about money, you have to put aside the money for taxes that you're going to need to pay by April of the following year. You can estimate your taxes based on your income, but the graduated income tax system that we have in the United States makes it very difficult to figure out exactly what your tax rate is going to be until you know what your total income is for the entire year. So you can estimate that, and then on a quarterly basis, you typically will pay those taxes. The other thing that's important is that the location of where you make a sale can seriously affect how much tax you have to pay. For instance, if you live and work in the suburbs for the most part, you're typically going to have to pay a local tax of about 1% on every dollar of profit that you make on your business. On the other hand, if you're living and working in the suburbs, but you make a sale to a company or a person in Philadelphia, you're going to have to pay the business income and receipts tax and the net profit tax that Philadelphia charges business for doing business in Philadelphia. That runs the same as the employment tax, which I think is about 3.2% for out of city residents. So you've got to file for that. It causes paperwork issues, and you also have to put aside that extra 3%. And then on top of that, you also have to pay, in addition to the normal income taxes you have to pay, you also have to make sure that you put aside money to be able to pay for the self-employment tax, which is the Medicare and Social Security taxes that are normally withheld from your check. You will have to pay them as a freelancer or as a self-employed person. We'll get into all that kind of detail in a little while, but essentially here, what we want to say is these are all challenges that we're going to be looking at. These are all important for you to consider as you are trying to manage your money. So how do you manage your money? Well, there's really, I think this is 8 steps that you have to consider to successfully manage money. The first is separate your business and your personal finances. All income and expenses that the business generates, that your freelancing generates, should go into and come out of a business account. You should have a separate business account just for the business, even if the business is just you. Any money taken out of the business for personal expenses, I recommend that you transfer that money from the bank account for the business to your personal bank account and then pay your bills out of that. Never pay a personal bill directly out of the business bank account. This will make tracking of your expenses for your personal expenses and your personal finances and your business money management totally separate, which you're going to need to keep track of when it comes time to tax time. It's also a good practice to have a separate business credit card if you're going to be purchasing a lot of services and supplies for your business. If it's just a few, it's not a problem to manage otherwise, but it's always a good idea if you have a lot of purchases that you're making of materials or services for the business to have a separate business bank account, separate business credit card. And then that credit card, and this is where some self-discipline comes in hand, only business charges should ever be made on that card. And then it should only be paid out of the business banking account. This way you have a wall between your business and your personal finances, which, as I said before, will allow you to be able to manage both effectively. The second thing you should do is create a personal budget. And I think a couple people mentioned that earlier. You need to know what you need to spend to be what your required spending is to live, to pay for your rent, to pay for your food, that type of stuff. So you need to understand what that is, your budget, so that you know what your fixed required monthly expenses are. And also, hopefully you're able to put aside a bit of discretionary funds so you can at least afford to have some fun and not just pay the bills. But you should have that budget together so that you know what you need to live and what you want to live. Third thing is, as we just talked about, create that reserve for taxes due on all the income that you earn each month. If your expenses are fairly low, all you need to do is look at the cash coming in and, hold on here, put aside somewhere between 28 and 35% of that before you spend anything. We can talk about where that 28 to 35% comes, but basically that's along the lines of what you're going to need to be able to cover your taxes on income that you get from a self-employment business. Typically, you're going to make payments of those taxes on a quarterly basis so that you don't have to pay them all at the end of the year. And in fact, it's required by the government that you do pay them on a quarterly basis after your first year of operation. Number 4, pay yourself. Make sure that you are paying yourself, again, from the bank account, from the business bank account to your personal account, and also that you are putting aside a little bit of money each month to create an emergency fund. The emergency fund is there to cover those emergencies like we just talked about in the previous slide, family illness, personal illness, whatever might come up, COVID, that basically interrupts your income. You want between 3 and 6 months of your fixed required monthly expenses. Those expenses you need in order to live, you need to spend. That should be, you should build your account up, your savings account, emergency fund, and typically you'll set up a separate account for this. And you don't need to save this all at once. You don't need to save 3 to 6 months within your first 3 to 6 months. You should try to do it over the first year or so that you're in business, to try to build that up so that you have it available if some emergency comes up. It should never be touched for anything else. And this is, again, one of those discipline things that's important to have. And I've, through my career, as when I was working as an independent consultant, I had to tap this a couple times because of unexpected interruptions to my income for one reason or another. So it's important to have, and it helps you to sleep at night to know that that's there if you need it. And then you should save for retirement. This may seem funny when you're 21, 22, 23 to think about retirement, but if you can save now for retirement and invest that in something that's a nice, stable growth fund, reasonable growth fund, not stable necessarily because they will bounce around. over the next 30 to 40 years, that will grow tremendously. And if you get into the habit of saving every month a little bit of money into some type of a retirement fund, it can pay off 30, 40 years down the road. Typically, as a self-employed person, you're either going to set up a Roth IRA, which is taxes or money that's saved after taxes, and then it grows tax-free, or a SEP IRA, which is a self-employed pension IRA, or some other tax advantage account where the money that you put into that you deduct before you pay your taxes. So it lowers your tax bill during that year that you make the money. These are kind of save it and forget it kind of accounts. Again, you don't want to touch this at all if you absolutely positively can avoid it until you hit retirement age, because there are penalties for withdrawing money from it early, unless there's special cases where you can withdraw early for different things where there's no penalty. But again, the longer it sits there and doesn't get withdrawn, the more it's going to compound and grow geometrically to a nice retirement fund for you. And typically, as a freelancer, this will be your retirement fund. You're not going to have a pension fund. You're not going to have a 401k because you're working for yourself. Then you want to make sure that you have insurance, both personal insurance. You have to cover your car, renter or homeowner's insurance, healthcare. They're all necessities. A life insurance policy is nice to be considerate to your survivors, and it's pretty necessary if you have young children to make sure that they have financial security in the event that you die. Business insurance you should have, and it should at least cover general liability. And depending on the type of business you have, the type of freelancing or the type of independent business, solopreneur, that kind of thing that you're doing, you may have to get some other insurance as well. And typically for things like management consulting or technical consulting, you need to add on what's called errors and omissions coverage, which basically provides you insurance coverage to protect against any damages that your advice or directions may end up causing to your clients. And then finally, don't forget to keep up with your outstanding debt payments, your credit cards, your school loans, that kind of thing. These should be included in your personal monthly fixed expense budget. And as everyone will tell you, the goal here is to minimize or eliminate your credit card debt entirely, because that's going to cost you the most for the interest rate. So you want to get rid of that as quickly as you can and keep that from getting too large in the future. Okay, so business accounting. We talked about budgeting, and we can certainly get into more details on budgeting if you like. But the accounting, the keeping track of, I think Carolyn asked about this. What do you keep track of? What are deductible expenses, things like that? So just to introduce a couple terms here, so that it's not that complicated. I know accounting can seem and bookkeeping can seem a little difficult, but it's really not that bad. So most freelance businesses, especially in the early stages, really just require a very simple accounting and bookkeeping system. I set up both my daughter-in-law and my son with a simple Excel spreadsheet workbook system, which I'm going to show you in a minute, a couple of examples out of those workbooks that I put together for them. There's no need to get real complicated, because your business finances typically are not going to be that complicated. You aren't carrying inventories of completed products and that type of thing typically. So you're not going to have to keep track of all that. So there's two types of accounting. And what we're going to focus on is cash accounting. Cash accounting is where entries are made into the books when cash changes hands. And if anybody on here is an accountant, please don't hold me to being perfectly exact here, because I am being kind of generalized, but it is relatively simple. Anytime cash changes hands, that's an accounting event. You've got to make a bookkeeping entry. So if you receive payment from one of your clients, that's an entry. If you make a payment on, to buy something, or you make a payment on your credit card, that's an entry as an expense. Accrual accounting, the bookkeeping entries are made when the obligation is made. So instead of when you get paid, it's when you sign the contract to do something. You make an entry, that is considered a sale when you sign that contract. Likewise, when you make a purchase, even if you don't pay for it then, if you purchase it on time, or you put it on the credit card, you make the entry when you make the purchase. Most of the time, that type of accounting is used for businesses with inventory or really complex financial systems. Again, individual, solopreneur, freelancing kind of businesses, the finances are simple enough. The cash accounting is typically what you're going to do for those. So very simple. Whenever cash changes hands, it's either income or it's an expense. So the terms that we typically use are revenue, which is your sales. It's the payments received from customers. We have direct costs, which are costs that you have to incur in order to provide the service or the product to the customer. These are direct costs that are involved directly in providing that service or product. So it might be, if it's product, it might be raw materials. If it's product or service, it could be the labor costs directly related to delivering the service to the customer. Okay? So for instance, if you are an artist, the cost of, and you're doing oil painting, for instance, you're doing portraits. The cost of the canvas would be a raw material, so that would be a direct cost. The cost of the packaging and the shipping to get the product, the canvas, the finished painting to your customer, if you're shipping it, would be a direct cost. Everything else, because the paints, you're going to use those same paints for other things, you would just treat as part of your expenses, probably. You wouldn't worry about providing that as a direct cost. Okay, so that's kind of the idea behind this. For operating expenses, these are those other costs. So it's sometimes they're referred to as fixed costs, but operating expenses are those costs that you are going to incur, that you're going to have, regardless of how many projects or products you're selling. If you don't sell anything this month, you are still going to have costs. And these are some examples on the slide here of different types of costs that you may have on a monthly basis. That it doesn't matter how many paintings you sell, it doesn't matter how many consulting projects you complete, you're still going to have these costs. So they are considered operating costs. And then if you take your revenue, your sales, subtract the cost of goods sold or the direct costs, and subtract the operating expenses for that month, that becomes your net profit or your net income or your profit. So that's the money that's left after you have paid all your bills for the month, basically. That gives you your net income. So that's the terminologies: the revenue, the direct costs, operating expenses, and net income. So as promised, this is an example from my daughter-in-law's graphics business that she has. And she works full-time. She runs this on the side. She's actually in the admissions department at UCLA, doing both graphics and doing admissions work, and also doing technical work. She runs their applicant relationship management system. But anyway, this is obviously for January. This is a monthly bill. And across the top, you can see categories of income, which is basically when she makes a sale. Office supplies, general supplies, equipment and supplies, which are things that she uses that aren't office supplies, but it would be things that she uses in producing her products. The phone and fax, which is basically phone. Nobody uses fax anymore. Internet and email costs. The cost of goods sold, again, this is direct costs that are generated to deliver products she's delivering. And then any marketing and rent and other, of course, she has no rent because she does this out of the second bedroom in their apartment. And then personal auto. In personal auto, what you do is you keep track of the mileage that you have to drive for anything that you do with respect to the business. So if you look over to the right there with the vendor source description, this is where you want to keep your notes so you know what all this stuff is. And so basically she did a project for TPL Group. She did a logo. So she billed them $1,200 to do the logo for them. And she delivered the files and proofs to their office because they were in Santa Monica. So she drove over there. It was 23 miles round trip. And at the current rates that they had back in 2020, she was able to, that converts to $13.23 in mileage to be charged as an expense for that project. Because again, she was delivering things to a client, so therefore it's a business expense. And then she has office supplies from Amazon. She got printer paper for the printer. The phone is her AT&T December phone bill. She charges the phone to the business. We won't get into how you should do that for splitting it, just it gets charged. Then there's Landmaster was another project, and she did a web page border design for them, for actually a couple of border designs. So she got paid for that $800, and then her website hosting and email from Intermedia gets charged to the internet, and the Blix brushes, oil paint, they're general supplies. The poster board that she used for Epic Sports for a project for them apparently cost $25 because that's under cost of goods sold, or her direct costs. So that's directly for a project. And again, she's got mileage there for driving to the store or driving to the wherever she went to pick that all up. So again, each week she sits down and puts in whatever happened that week. So you can see for her business, there's not that many entries because again, it's a part-time business for her. But again, this isn't difficult to do at all. And then for February, actually, there's the Epic Sports that we just talked about. That's the project there. And she had shipping from UPS. So there's postage and shipping there. And then other items that she bought during that time period, including a plein air easel. So I guess she's planning to do some outdoor painting as well. So anyway, so that's an example of January and February. And then what happens is that all gets collected here on another screen automatically. And this is, if she had filled this all out, I just captured this after 2 months. But if this is all filled out, this gives you down the bottom here, your total income for the year, your total for each of these categories. And well, there's mileage right there, which is used in the calculations for mileage. The importance here is each of these categories is a deduction on your income taxes on the federal forms. So by doing this on a monthly basis, going back here, by filling these out on a monthly basis, this system allows you then to have your records at the end of the year to be able to fill out your taxes. Fairly simple, right? So note here one thing though, there are no salaries included here. And the reason for that is we're assuming in her case, certainly it's the case, she is the only one. And I think that, you know, as a freelancer, typically you're going to be the only one that's working in the business. And so normally when that's the case, whether it's freelancer, consultant, somebody doing auto repairs, by themselves, that kind of thing. You normally, instead of taking a salary, will take what they call an owner's draw, which goes back to what I was talking about earlier. When you take money out of the business, you transfer money from the business account to your personal account. As soon as you do that, that's an owner draw. You're basically pulling profit out of the business and using it for your personal expenses. It makes it very simple, makes the tax accounting simple, and you don't have to worry about properly running payroll and doing withholding and that type of thing. You do your own withholding by putting those taxes aside that I talked about before. Okay. So to quickly recap, the key points that I want you to take away from today is, number one, separate your personal and business finances. I think I've said that a couple times now. Create a personal budget and stick to it. Keep track of all your business expenses and income. And like I said, it's a good idea to do it weekly. I wouldn't do it, again, you're not going to have that many payments coming in and that many expenses being done. It really doesn't make sense to do it every day. It just wastes time. But if you set aside 15 minutes to a half hour every week at the beginning of the week, I typically recommend that you do it at the end of the week, Friday afternoon kind of thing. Put aside an hour, put it on your calendar, schedule it to do your accounting, which it shouldn't take anywhere near an hour for most of your businesses. But put aside that time so that it gets done. Make sure you pay your taxes quarterly. I have a lot of examples of companies, individuals, relatives who did not pay their taxes and couldn't pay them when they became due in April because they forgot all about it. Make sure you pay attention to that. That can be devastating. And finally, get help when you need it. Know what your limits are and look for help. And the places you can go for help are, number one, an organization called SCORE. You can find them at score.org. They have a ton of webinars and recorded video library presentations on all sorts of topics, including personal and business financial management and accounting and all sorts of other things. They also have counselors that can help you with your business planning in general, more at a high level, kind of a 50,000 foot level of what you want to how you want to organize your business, that kind of thing. But their videos, library, and their webinars are top notch and well worth checking out. The selfish plugging here for the Small Business Development Center at Temple, which is where I work. We have a series of webinars, again, recorded ones and live ones. And we also provide individual consulting services, one-to-one consulting services to help you to get your business registered as an LLC or an S Corp if you want to do that, to help you with organizing the business, run you through these bookkeeping tools that we have, that type of stuff with simple bookkeeping. The nice thing about that is that both SCORE and the Small Business Development Center are resource partners of the Small Business Administration, the SBA, from the federal government. And so we are able, through grants from them, we're able to provide these resources to companies that are located in the Fox Temple's SBDC case in Pennsylvania at no cost to the business. Then there are accountants that will give you individual advice, do hands-on bookkeeping and tax services for you, but they do charge a fee, and that fee is variable depending on how good they are, how big they are, and how much hand-holding and help you need. But they are there. Financial advisors, you can get both personal and business advice and financial planning for both short-term and long-term goals. They tend to be fee-based. The good ones are fee-based. The ones that aren't fee-based are typically going to be taking a percentage of every investment you make, of other things you do. When you're looking for just the advice side of it, not necessarily investment. You're probably going to end up with a fee-based one. And then there's all sorts of free or very inexpensive courses where you can learn all of this accounting, bookkeeping, and budgeting, and how to do your own personal budget, from LinkedIn Learning, from Coursera, all sorts of good stuff available through there that, yeah, most of it's free. The LinkedIn Learning, I think, carries a fee, and I'm not sure if part of our Temple system allows you to do that for free or not. I'm not certain about that. With that, I'll open it up for questions, and we'll, just have a discussion about some of these topics and try to answer some of your specific questions that you have.
Okay.
And there's my contact information, and the information for the SBDC, which we'll have available. These slides will be available to you after the presentation today.
Carl, just before we go into questions, can you stop sharing? I just want to share a link to a survey. Let's see if this works. Okay, so as many of you know, one of the things that we try to do is get constant feedback to be sure we're meeting your needs. So please either scan this, or I will put in I also just chatted the code. It'll take you 2 minutes to complete this survey. Please do that. We'll give Carl 2 minutes to catch his breath, and then he will take questions. Okay. Okay, so Carl, let me go through some of the questions that have come up. One is, you took us through the Excel spreadsheets as a way to track, expenses, revenue. Are there any, or is there any prepackaged software or platforms that you would also recommend, perhaps for people who aren't comfortable with Excel?
Yes, there's several. The most popular one is Quickbooks. Quickbooks is comprehensive. I use it for my businesses, which are both basically single member consulting firms. One's technical and one's marketing or management consulting. And it works wonderfully. It's automatic. You still have to make those entries every week. I mean, it's still that discipline about you have to do it. I think in general, I mean, the example that I showed is a formula-based workbook. It's all locked, so you can't mess it up. All the formulas are protected. Because I know both my son and my daughter-in-law, and it's got to be locked or they'll mess up the formulas. So it's actually as simple as putting them in the right column, putting the data in, putting it in the right column, and making the comments on the end, and everything else is automatic. So that's why that was built, to keep it simple, so that people that didn't understand Excel, didn't feel comfortable with Excel, or don't feel comfortable with bookkeeping. It's as simple as you can make it, basically. But QuickBooks is very good. That runs around I think it's $175 for the desktop version, or $10 a month for the online version. Again, to some extent, I think for a freelance business, especially for creative type people, where you don't have a lot of expenses, inventory expenses, things like that, it's probably pretty simple to set up, but you're possibly going to need help with that as well. And you can get help with setting up QuickBooks. There's lots of people out there that are certified QuickBooks experts that can help you set that up, and it might cost you another $100 or so to get it set up for you.
Okay, great. So you spent a lot of time talking about, putting money away for emergencies and possibly retirement. But if you're starting up, what is realistic to believe as a time frame for when you'll start making income? And I know this is not a fair question, but it's on some people's minds. What's the average until someone actually can be generating enough income to potentially support themselves?
Right. That is an unfair question. It is highly variable. Normally, I recommend with any business, I recommend that you not expect to make a profit for the first 18 months. So, if you're going out on your own, make sure you have financial security, whether it's your savings, whether it's, living in your parents' house until you can, get out on your own, whatever it is, to try to do that. Now, that is an average. There's a lot of people that start making money for their business right out of the gate. I've seen several students from Tyler who have, before they even leave Tyler, they're making money selling paintings or making money doing graphic arts for companies and that kind of thing on the side. So they're making money already. By definition, if they're doing that kind of work, they're probably making a profit on everyone that they sell. Because they don't, there's minimal overhead for those kind of businesses. There's minimal expenses. Likewise, my son's case, he was making his rent and his food bills when he was at Temple from junior year on, playing down the city. He had enough business, he had enough gigs down the city that he was supporting himself, except for his tuition and cell phone bill, which I think he still doesn't support himself on. I'm not sure. I think he's still on our bill. But no, so it depends. I've seen those kind of situations. If you're in a situation, if you're in a field like filmmaking where you need to get a lot of equipment, that might not be the case. If you have to get your own equipment, that type of thing, you might be a while before you're able to afford the equipment or be able to pay the bills that the loans that you've generated getting the equipment, things like that. So it's gonna depend. But on average, if you can make sure that you have some kind of financial security for a little while you're getting started, that is absolutely the best thing you can do.
Yeah, interesting point you make, Carl. That's one of the reasons that we like to encourage people to start their business while they're in university and somehow having their housing paid for or paying it on their own. The other interesting thing is we had a gentleman last year who started his own apparel company. And he said the biggest mistake he made was moving out of his parents' house to get his own apartment because he wanted independence, but he didn't merge his personal desires with the business reality as he was starting. And he ended up moving back home and successfully launching his business because he could take those expenses and invest in his business. Good. Okay, a couple tax questions. First one is, can you briefly talk about sort of the tax ramifications of different types of legal business forms, whether you be a sole proprietor, a corporation or whatever?
Sure, I can touch on it, and I'll precede it with, I am not a tax professional nor a CPA, so any advice that you may think you heard from me was not actually imparted, and you should not follow it. Okay, so sole proprietor, let's start with sole proprietor. The sole proprietor will file taxes for the business as if there are their own income, which it is, because it's a sole proprietorship, you are the business. So in order to do that, you fill out what's called a Schedule C that gets attached to your Form 1040 each year. And the Schedule C is basically a profit and loss statement for the business. So again, that spreadsheet, that final spreadsheet I showed you, that was the summation of everything that happens during the year. That's the information you need to fill that form out. So you figure out what the profit is for the company. That becomes then your personal income. And so you put that gets transferred onto your 1040 as part of your income. So if you're working for a company and you're getting a W-2 at the end of the year because you had salary and you're doing this other business on the side or next to it, you just add those two together and that gives you your total income. The difference is if you're working for a company, if you look at your pay stub, you'll see that they withhold federal taxes, state taxes, local taxes, but they also withhold a total of 7.65% of your salary for Social Security and Medicare. What you don't see is the company is paying another 7.65% of your salary for Social Security and Medicare. They pay half, you pay half. When you are the company as a sole proprietor, you pay it all. So it's 15.3% just for Social Security and Medicare. If you figure that your typical, say you're in the $30,000, $40,000, $50,000 income level, your income tax rate's going to be in the 13 to 15% range right now, I think. So let's say 15 to keep the numbers easy, plus another 15 for the Social Security and Medicare, and you're at 30%. Add another 3% for Pennsylvania. If you're in Philadelphia, add another 3% or so for Philadelphia, and you're at 36% tax rate. Okay? So that's for a sole proprietor. That's why I tell you to try to put away 28 to 36%, somewhere in there immediately. Just park it someplace else as soon as you get paid, because you're going to have to pay that in taxes. If you're an LLC, but a single member or single owner, they're referred to as members in LLC land, you will be treated like you're a sole proprietor for tax purposes. So you still fill out the Schedule C, it's all the same thing. Because what they do is the IRS considers an LLC, a limited liability company, to be a disregarded entity. So for tax purposes, they disregard that it's an LLC because there's only a single owner. Okay? If there are two or more members of the LLC, then the IRS still disregards it, but now because there's multiple owners, it becomes a partnership. And so it gets taxed as a partnership. So for instance, if it's a 50-50 partnership and the profits are split 50-50 between two partners, half of the profit of that LLC will then flow on to your personal taxes, and you will pay tax on that. And you will also pay 15.3% for Social Security and Medicare, as well as all the other taxes. So you still have the same kind of tax rate. You're just paying for half of it instead of the whole company. And hopefully with partner, you're making twice as much. So, that would be nice if that were the case. Okay. You asked the question. Okay, for a corporation, for a subchapter S corporation, you have to fill out a different tax form, but I'm trying to think of the easy. I never can figure out how to explain this simply. Okay, as a subchapter S corporation, if the owner, you, are working in the business, you must pay yourself a salary that is, trying to remember the terminology. I can't remember the terminology, but basically that is standard and customary for the type of work that you are doing. That salary must have all the withholding that a regular corporation or company would take out of your salary. So it's going to withhold your tax, your federal tax, your state tax, your local tax. It's also going to pay your half of the Social Security and Medicare tax. So it's going to take out 7.65% of your salary and submit and provide that to the government. At the same time, the subchapter S corporation will pay the other half of the Social Security when they do the payroll. So they will pay 7.65%. So it's still coming out of your pocket. It's now just coming out of your paycheck and coming out of the corporation instead of everything coming out of your tax, your personal taxes.
Okay.
I think that kind of covers it. If anybody has a question, please just unmute and shout it out if you've got any other tax questions. But that's the quick overview. There's complexities involved, and what your decisions you make as far as how you want to organize from a tax standpoint should be done in conjunction with your accountant, because your other income from other sources dictates to some extent which way you want to organize the business and how you want to receive your income.
Yeah. And next week, when we have the session on legal issues, we'll talk in depth about the different forms. My guess is no one here is going to do a sub S corporation, but for sole proprietorships, LLCs, etc., we'll talk about the ramifications of that in terms of liability and other issues.
Right. But when you compare sole proprietorship and LLC from a tax issue, it's essentially no different. So, yeah, really it comes down to the legal issues, which we'll talk about next week, and I'm not going there.
Okay, thanks. All right, so we'll ask two more quick tax questions, and then I'll put up the code for FLDP. So one question on the taxes is, if you're in one state and you do work for a client in another state, which state do you pay taxes and get taxed on?
Right. So from a income profit standpoint, you would pay tax in the state that you reside in, that the business is organized in, which is presumably where you reside. The only thing you will have to worry about in doing interstate commerce is sales tax. And the reason I say that is that in some states, different services and different products are taxable for sales tax. In other states, they aren't. For instance, there are states, and I forget which ones they are, that, you know, since I do consulting, there are states where consulting is a taxable service. Thankfully, in Pennsylvania, it is not. But if it's taxable, you have to then collect the sale. You have to get a sales tax license in the state you're doing business, collect the sales tax that is appropriate for that, and then submit that to that state as sales tax payments. So it becomes complicated.
Wow. Okay. What if you're in the city, Philadelphia, New York, and your clients are in the suburbs? Do you pay city tax or?
Yeah. Nobody in the suburb, none of the suburbs charge businesses for doing business in their county. Philadelphia charges businesses for doing business in Philadelphia.
Whether you live there or not.
Right. It's a lower rate. Basically, the rate that you pay, if you're in the suburbs, the rate that you pay for the combined taxes, that BERT NPT tax, the business income receipts tax and the net profit tax, is equal to the non-resident wage rate in Philadelphia. And if you're in Philadelphia, you pay the resident wage rate.
Okay, great. Okay, so let's give Carl a big hand.